We're running a $2 trillion a year and rising debt. And this is going to lead to much higher inflation in the future than what we've experienced in the past.
As Peter Schiff has pointed out, inflation's source is becoming more evident. It will worsen due to our persistent massive deficits, exemplified by our $2 trillion annual debt. Welcome back to the Finance Zoom channel. In today's video, let's talk about whether we are truly headed for an economic disaster. According to Peter Schiff's recent report, he believes that the decline in the CPI is a valid point. He mentions a low point in the year-over-year figures about 2 months ago, but he doesn't specify the exact percentage. He notes that the current consumer price index is at 3.7%, and it's going up. Schiff worries that inflation might become a much bigger problem in 2024 than in 2023. This perspective aligns with the growing apprehension about rising inflation rates and their potential economic implications.
Because the increasing interest rates actually contribute to the rise in the CPI, because interest rates are a price, and it's a very important price for a lot of companies. Just like labor and rents and raw materials, companies borrow money to conduct their business, to make capital investments, to expand. A lot of these companies have taken on debt over the years, and now the cost of servicing that debt has risen sharply. I think it will continue to rise. And so businesses need to pass on these higher interest rates to their customers in the form of higher consumer prices. So every time the Fed raises rates, it puts more upward pressure on the CPI.
Peter Schiff highlighted that our economy seems caught in an inevitable downward spiral due to continuous government spending, irrespective of which political party is in power. This unceasing spending leads to money printing, resulting in rising inflation and a deteriorating consumer price index. As highlighted by Peter Schiff, what's even more troubling is how increasing interest rates exacerbate the situation. Interest rates are crucial for many businesses, just like labor costs, rent, and raw materials. These companies rely on borrowing to function, make necessary investments, and expand their operations. Over time, they've accumulated substantial debt, and the cost of servicing it is now sharply rising. This trend appears set to continue, placing the burden of higher interest rates on consumers in the form of elevated prices for goods and services. Peter Schiff also pointed out that the Federal Reserve's decision to raise interest rates only adds more pressure to the CPI. As a result, people find themselves grappling with a challenging scenario where everything is becoming more expensive while their income is decreasing. Recent statistics show that household income fell by 2.3% in 2022, marking the lowest level since 2010. This combination of rising costs and declining income is indeed a cause for serious concern. In economics, Peter Schiff's voice resonates with unparalleled weight and gravitas. Now, let's talk about Peter Schiff's assessment of the current economic situation and the dollar's future. Listen closely to his insights.
Unfortunately, we're going to have a dollar crisis and a sovereign debt crisis. The Fed is going to print money until the dollar collapses. And I think that that day of reckoning is at hand. I mean, I don't know that it's tomorrow, but it's coming sometime soon, because you can already see the world is trying to divest itself of the dollar. There's a big movement to look for alternatives to the U.S. dollar, and they're there, and that's happening.
Peter Schiff's assessment of the U.S. dollar's economic situation and future is nothing short of a stark and foreboding outlook. Schiff firmly believes that we are on the precipice of a significant economic crisis characterized by both a dollar crisis and a sovereign debt crisis. In his view, the primary driver of this impending catastrophe is the Federal Reserve's persistent practice of printing more money. While he acknowledges that pinpointing the exact timing of this crisis is challenging, he asserts that the day of reckoning is drawing near. Schiff is also reminding you to take this seriously. His assessment is based on history and a deep understanding of economics. It's essential to closely examine his analysis to understand how serious the situation is and what it could mean for you. One critical aspect of Schiff's analysis is the worldwide shift from using the US dollar as the world's primary reserve currency. He points out that many countries are actively seeking alternatives to the dollar. This shift matters because, until now, the US has been able to sustain its inflation by passing it on to its trading partners. When these partners receive dollars for the goods they sell to the US, they absorb the inflationary impact effectively. However, as more countries move away from the dollar, Schiff predicts that the dollar's value will decline rapidly, causing prices in the US to rise quickly. This is especially concerning when combined with a massive national debt. Rising interest rates put immense pressure on the Federal Reserve to print even more money and buy bonds, which creates a dangerous cycle. By drawing on case studies such as Argentina, Zimbabwe, and Venezuela, and historical events like Weimar Germany and the Mississippi Bubble in France, Schiff paints a vivid picture of a recurring pattern that typically commences with a government grappling with excessive debt. This historical precedent is a stark reminder that the path to economic disaster is not unprecedented. One of the central points that Schiff drives home is the alarming magnitude of the United States national debt, which stands at a staggering $33 trillion. When coupled with unfunded liabilities associated with programs like Social Security, Medicare, and guaranteed pensions, this creates an unmanageable financial burden. Schiff underscores that traditional means of debt repayment, such as taxation, are not viable solutions to address this fiscal crisis. Historically, governments facing similar circumstances have resorted to a common strategy: inflation. In Schiff's view, inflation is a tool governments use to reduce the actual value of what they owe. They achieve this by increasing the money supply, which reduces their currency's purchasing power. However, this tactic has significant consequences, eroding regular people's savings, assets, and incomes. It's not just an abstract idea. It's a harsh reality that has occurred many times in history. Schiff's analysis is a powerful warning, alerting us to the precarious financial situation the United States faces due to its excessive debt and the looming threat of future inflation. He emphasizes that despite being used as a solution, inflation has negative repercussions for individuals and the broader economy. Most importantly, Schiff suggests that inflation is the main reason why people are moving away from the US dollar and assets tied to it. He believes that if the Federal Reserve responds to rising interest rates by printing more money, it will encourage those who hold US treasuries and dollar-denominated debt to sell them. This would worsen the situation by causing asset prices to drop, interest rates to surge, and a currency crisis.
I think the world is going to go back to real money as the basis for the monetary system, and all of these fiat currencies will be legitimate currencies again because they will be backed by real money, which will be gold. And that's going to level the playing field, but it's going to be very difficult for the United States.
Peter Schiff believes that the world might go back to using real money like gold to support currencies. This would make money more stable, but he's worried about how this might affect the United States. For a long time, the US has been lucky because it can create much of its own money, the dollar. Other countries also use the dollar as a safe place to keep their money. This has allowed Americans to buy many things even if they didn't save enough money. Schiff thinks this might change. He thinks the world will stop using the dollar so much. This could make it harder for the US to keep living the way it has. Americans might need to start saving more money and making more things themselves. If they want to borrow money, they might have to borrow from other Americans, not the rest of the world. Peter Schiff's analysis clearly warns about an imminent economic crisis marked by a weakening US dollar and mounting debt. He urges policymakers, stakeholders, and the public to take heed of these warning signs and explore alternative economic strategies. This is crucial to avoid what he views as a dangerous path towards a severe currency crisis. The initial question we posed, are we headed for economic disaster, gains even greater significance in light of Schiff's insights. While his perspective may seem negative, it's based on historical evidence and fundamental economic principles that demand serious consideration. It serves as a stark reminder of the critical need for fiscal responsibility, prudent monetary policies, and proactive actions to address growing debt challenges and the potential for inflation. Ultimately, the future of the economy remains uncertain. Still, Peter Schiff's alarm should prompt informed discussions and decisions aimed at protecting our economic stability and prosperity. Thank you for watching. Stay well informed, take proactive measures, and be ready for any potential hardships. Be sure to click the subscribe button to access more insightful content on the Finance Zoom channel and watch my upcoming videos. During economic uncertainty, knowledge and wise decision-making can serve as your most invaluable assets. What do you think about this topic? Let me know in the comments section below. Don't forget to like, share, and subscribe to Finance Zoom channel. I'll see you in the next video.